will work from here. But it's definitely very interesting times, if not even, yeah, very unique times, you could say, right?
Yeah, exactly, correct. And so I would like to start off. First of all, I would like to welcome everybody to the session. I know most of you couldn't make it because it's the weekend. I understand. It will be recorded and available for the public
Mm-hmm.
to view at any time. We will also upload it to our YouTube channel. Alex, well, why don't you go ahead and introduce yourself real quick? Give us a little bit of a background story about yourself. How did you
Sure.
start trading? Your first impressions, you know?
Yeah. So basically, I've been in the world of FX for, my God, 15 years, something like that. And I initially started as a musician, to be honest. I wasn't even into forex or any of that. I was still a student, but also a musician, and I had made some money from music. Lucky enough, I would say even. And what happened is that I got introduced to forex because I was looking for investment opportunities with that money. I didn't know what to do with it, And in hindsight, I don't know. I should have sat on it just because I definitely lost it. So that much I can tell it already. So I had a friend that introduced me to what he called a super great trader, and I kind of, put the money at the time. There weren't too many brokerages around like there is today. And so it took months actually to get the account open. And then I got like
Wow.
impatient. And then finally we could start. And I put like all my savings in there, around 50,000 euros at the time. So it was quite a lot,
Yeah.
And
This is which year
literally,
approximately? This was which year approximately?
I think it was in 2006, 2007,
Yeah.
something like that. And long story short, I lost the money in 2 days completely, and I didn't even trade it. The guy, like whoever the guys he was trading, and first day he lost about almost all the account, and I wasn't so sure if it was for me also first experience to see reporting equity, P&L, like
Yeah.
what is this, and is this right? It looks like so little left and stuff, and turned out to be right. And so the guy said, no, I had a bicycle accident and bike accident, whatever. This never happened to me before. And then he sent me some loose MT4 statements with profits on them and showed me like, look, all my other clients are doing well. And if you come back in one more time, then I'm going to make it back for you. And I'm going to trade up for you without any fees. And I was a bit intrigued because I hadn't the money was gone, and I was thinking of a way to how to get it back. And so that's kind of the thing, if you do an initial mistake that gets you into something, it doesn't get better by making more and more mistakes, And so because what happened to me is I asked my parents for money, and they, being really the supportive kind, they cashed in their retirement fund and gave me that money, about 90,000 euros at the time. And overnight, the guy turned them to about 150, 140 on equity. And then he texted, like, actually it worked great, but it also tells you, the amount of leverage and what was going on could
Yeah.
not have been healthy, right? At all.
From 90 to 150 overnight. Then it's,
Yeah, exactly. In a couple of hours, actually, in an afternoon. And then he texted me asking me, like, should we close the positions? And I'm like, I don't know. You're the guy, right? I mean, you just made 50 grand over the afternoon. What do you think? He said, we keep it open, and tomorrow we should have another 50,000. And stupid as I was, and the reason I tell the story is because that's so, representative of all the mistakes that beginners make in forex, and how I started right there, and actually in way larger dimensions than I ever would have hoped for. But it is what it is, so I can't change that. It's part of my story, and it got me here. So I don't have hurt feelings about it anymore. So what happened? There was an FOMC overnight.
Oh.
And basically next morning I had 6K, 5K left in the account, something like that. So, and like literally lost my parents' money on top, and I couldn't tell them for many months, and I really didn't know what to do. But also through another friend, I got the opportunity to start to start working, because as they say, you want to take on the island, you got to burn the boats. Like there's no way to retreat, no way back. You can only go forward. Now, why we need to make the stupidest mistakes ever in our lives usually before we're willing to make that step forward only, that's something that we're trying to change, I guess, by communicating it in our generations here, something that didn't happen before that. And I start working as an intern for a German private bank, and literally, they had equities, they had options, but they didn't have a forex operation yet, and that kind of was my thing. So I built the whole forex business there. Being everything. I was tech support, customer service, sales, cleaning lady,
of the whole operation.
Think about it. Everything. But that was also the reason why I had good relationships with all the clients. I was the guy onboarding everybody. I was making sure nobody had any issues. So they knew me like, you need something solved, you go to this guy, he's going to, run until it gets done. And some of my clients, very few of them, were successful. They were like very successful. Like I remember a guy making 6 figures over an NFP trade. I was like, damn, what's he doing? And those were the kind, and I started to understand better what is it that they're doing. I was able to talk to them directly. They would give me feedback, help me understand things better. And from there, the whole thing started, and then I got into building more relationships with real traders and understanding strategy development and the whole process of what it takes to develop a strategy. What is an edge? How do you approach it systemized? How do you make sure that your rules are working? How do you build the confidence to do all that? And, and all this whole thing is like, being a trader is like this living organism type of thing, and so there's so many things you got to take care of, and they're also so personal to you many times that there's no way to do that other than to really just go out and stick to yourself, your process, and keep doing. And that's what I did. And essentially I ended up moving from the bank to the asset management side of things, and but that was a long way coming. That was coming 24 months, before then. I told the clients and their network and everyone, like, here I was trading that. They saw me, like, the development of everything, the history of the trading. We prepared, audits and make sure that it was sellable to an institutional investor, right? And I got prepared for that by also, and at the end of the day, from former clients, then mentors, and then moved over, and we started managing money for other people, and that worked pretty well. We won a couple of awards, like we won the Investors' Choice Award in London, like we went to the Dorchester Hotel in London, with the Maybachs and whatever, like the craziest, and like for me, it's like damn, yeah, I'm in a movie now. What's going on here? We won also the best macro manager for Hedge Week in New York, so we traveled there as well for that, and so it was a pretty good time. But what for me was more important is that, and I think that's the promise of forex to most people, is the ability to have freedom, to be self-directed, to not needing to work from any specific place, and all of these things, And I think even though when they're used a lot by questionable marketing activities, the promise is still real. Like this is what I'm living, and this is what I chose to do, because I then said, hey, you know what? I don't want to go corporate. I could be some director in some corporate company probably, or maybe, I suppose. But I chose, like, guys, thank you for everything. This is how I leveled up. I leveled up not from trading $500 to $1 million. I leveled up by working on myself, building a strategy, becoming reliable, attracting money, trading other people's money, leveraged up from the amounts of money there because we were trading millions, made money for myself. And then, I said, guys, my wife is pregnant. I actually have enough money to sustain myself, and I choose this over, chasing a career. No clients, no appointments, no nothing. We bought a house, we got our first child, and I traded from home, and that continued down for a couple of years, really. And also fantastic, magical time. But also as a when that's another, the pitfall of a trader. Even when things work from a trading perspective, if you're only by yourself, for yourself completely, there's another challenge that's you got to tackle there. I think that's really the reality. Sorry, then I'll let you answer. everything has a challenge and a struggle to it, no matter what level you on. You know, if you think you're going to make it somewhere and then you'll finally be there and never need to work, or everything's going to work out magically forever, that is called death. You know, this doesn't exist in life, you know. And I just want to make sure that everybody understands that there's work and a daily process, and everything that you need to do on, or a challenge or something that you're struggling with, or that you're not getting, or that's not working out on every level of your career, or success or not success, that is happening. So you've got to learn how to deal with that a lot more than just looking at, oh, should I trade an EMA cross, or
Yeah,
you know, or
exactly,
use the signal provider, or but
exactly.
sure, I'm sure you have some questions of yourself.
Yeah. No, you know, the most thing that intrigued me about your story was the mental shift that you decided to do from losing your own savings, then losing to your parents' pension, and then deciding, all right, this is I'm in a huge problem that I need to solve, you know,
Yes,
and
exactly that.
changing the mentality completely from being like negative to starting to work on the problem, and every problem has a solution, keep on adjusting it. So I think that was the biggest take from your story for me personally. It's a nice shift. Today, you know, I see it with a lot of students, and I see it with a lot of people. They go through a couple of days of a losing streak and they lose it completely.
Right. Yeah.
You know?
And it's super important that you know, when you have the wrong expectations, you judge yourself, you judge the things that happen to you just in a wrong way, you know. And so what happened to me, and also you could call it luck, you know, or the universe, or law of attraction, or God, I don't really care what you call it, you know. But in that time of my biggest despair, I discovered personal development books and things that really spoke to me, you know, and that changed my way of thinking, where I was saying, you know what, everything I've tried so far in life got me here. I've got to change something, you know. I can't keep going on trying the same thing and expecting different results. We've got to change something dramatically. And that's what I did. Like, basically all my friends from the time, I wouldn't spend time too much with my friends. Actually, I didn't, you know. I committed to a relationship, now my wife. Then I was literally only working, you know, and like I literally changed my whole life completely. Overnight, it's actually it sounds like I made the decision. The decision was made for me when I lost the money overnight. So it happened literally overnight. But but yes, I could have, you know, just collapsed on that pressure. I know, you know. And I think a lot of the driving factor here for me was that I couldn't tell my parents, you know. There was an amount of shame and disappointment involved that wasn't, you know, allowing me to just face it and accept it, and just, you know, accept my failure. But I said I had to make this up somehow, you know, and but not by trying to how to make it up in the first time, you know, when I got the pension money lost in the first place. So you got to make different mistakes. You must not make the same mistakes.
For debt. Well, actually, I think this story that you just said specifically, because I know a couple of people that I know personally that are watching this, that are in a certain type of scenario like this, and I think that you have definitely like motivated them and told them like it is possible to get out of a situation
but
like
please
this.
understand that it's only possible if you do the right things. You've got to look at trading just like any other profession in this world. You know, you want to be one of the best, you've just got to do more than most others do, and you've got to do it in a measurable, structured, systemized way. If you just try this strategy here, that strategy there, a little bit this, read a little bit Elliott wave, then I draw my Fibonacci somehow and try to make a, you know, cook a soup out of this, that's fine, you know. But you don't know, does the soup taste to begin with? You know, what is it that I'm trying to do here? You know, is it like a sweet or salty? You know, like, you've got to be more structured in what you're trying to do, because otherwise, and that's also the example that I like to bring always, like most people are looking for love by going from one night stand to the next. They're going sideways, you know, instead of going in depth, you know, and that doesn't work this way. You've got to go in depth in whatever you want to be successful with. You know, if you don't understand it better than most others, if you don't do more than most others, if you don't like it, if you're not excited about solving this puzzle, you know, as part of what you're supposed to do, you know, I feel, for example, as humans that we're born, this creative force that runs through all of us, that we see all over nature. Everything that nature does all the time is trial and error, refinement, testing, and whatever stakes remains, whatever becomes the most strongest. But the process of trying and being a problem solver and an inventor, and always put in that effort with enthusiasm of gaining new understanding, building a stronger version, you know what I mean? And that's the quest to success. It's not, oh, I want the money and the Lamborghini or the 500 pips or the Instagram, whatever,
Yeah.
that happens. Well, obviously most of that is BS anyway to begin with, like the picture that's put out there is so wrong. And the reason for that is the wrong incentivization of the forex industry. The forex brokers pay for losing clients, and every signal provider, or most of them, is motivated out there to bring clients to brokers, because brokers pay up to $500 to $1,000 per single client that you bring them. That is the math that works for them. On the average of all clients that they have, they can pay you $500 to $1,000 per single client if that client deposits a certain amount of money, trades 2-3 lots, whatever.
Also
stuff like
IB affiliate programs. And
and all these IBs go out there, and in a way they do what I did. They tell their parents and friends and families how great this investment opportunity is, and everybody fucking loses their money, and all over the fucking world. And especially, sorry for cursing, I'm not sure if I'm supposed to do that, but and if you look at it, especially since this whole thing got systemized and automized and scalable from an online perspective, like automatic KYC, automatic account opening, deposits, withdrawals, all of that was extremely made more efficient and automized in the industry. That actually allowed brokers to go for smaller account sizes. So now they're taking money from the poor people, actually, from the $500, the $100, the $50. Those people, they just lose it all completely always, and they just make sure that they have a system of bringing more and more and more of these little suckers in that just die, and every time, and it doesn't have to be like that. The industry is built like that at the moment. But we've got to talk about the reality of the incentivization. If I, as a partner, if I look at, hey, I want to run an online business, and there is this thing called forex where they will pay me $500 to $1,000 to bring them some people that I may attract with an ad or some signal group or whatever, then many people would think that's easy money. Let's try to do this, Yeah. So, but there needs to be a different incentive here. And that really, I think that risk taking, because this is what it all comes down to, that brokers take risk, meaning they internalize their clients' trades. They take the other side of the trade. Your losses are their wins, to make it very clear.
Isn't that called netting, I believe?
Well, netting is is basically their longs and shorts. You have 1,000 clients trading long, you have 900 clients trading short, so you have 100 net position. So that's actually your real position. But you may even decide to take risk on it, especially if they're all in the wrong side of the market, and that's what typically happens. But I mean, like everything was extremely optimized and made better and easier for these forex companies to make more and more money with this type of approach. Now, I think from a regulatory standpoint, we should talk about whether brokers should be allowed to take risk to begin with. But that's a long conversation. Will take a long time. But it will incentivize other things. People will not be incentivized to go out, tell a fake bullshit story, scam their cousins and friends and neighbors into losing money, basically, and it needs to start by talking about it. Yesterday, I had a post on LinkedIn with one co-founder of an Australian brokerage who's saying the same thing. Like, he's running a successful A-book business. And he says, like, hey, if you look at the profitability between a B-book business and an A-book business, it's not hugely different. And the A-book side is not even, developed enough to think about it, what a potential is still in there. While the B-book side has been extremely optimized, like, what strategies can we do? Bonuses, this and that. And, just like, get the little suckers in, and it's all scaled through the internet. It's tens of thousands of them, hundreds of thousands over the whole, we talk South America, Southeast Asia, the MENA region. They're small accounts, man. Those are guys that don't have money to begin with. And they are actually being targeted to lose their money. So that's why I don't, I'm sorry, like I got off board here a little bit from the topic, but that's, it's something that really people need to know. And I think the most important takeaway from that conversation is that you've got to understand the fucking landscape you want to succeed in. If you don't understand in what jungle you're actually running through. You're going to be eaten, bitten, and killed, you're prey. So it's all about
always remind, I always remind like everybody in the channel, in the mentorship program, that do not forget we are in a rigged market. Like the advantages are not with us if we do not play according to a very systemized approach and strict rules and etc. That can be variable and change according to time in the market and the volume and liquidity and revenues. And the one thing that I would like to touch with you also on is, this is something that I always like to get in discussion with the students on, is the key is in how fast can you adapt to certain situations and adapt to the market, and how quick can you recognize a mistake in a system or in your strategy and able to change it to whatever the volume is. Or I'll give you an example. So we began the month of January with a very systemized approach, and we were aiming for 1 to 2 risk to reward per trade. That was our goal, and after the first 2 weeks, we realized 70% of our trades hit break even, right? And then we were able to look back and go through the trades, and we realized if we were to secure on a 1-to-1 RR, let's say, we would have saved, for example, 60 more trades or whatever, whatever the number is. So the process, and this is what I try to say all the time, the process of looking back at the trades and journaling and seeing where you went wrong, not only from a technical perspective, I'm not talking about like Fibonacci's or resistances or whatever, but from a systematic point of view where you can adapt to the market to maximize your profits as much as possible and minimize your losses as much as possible as well.
1000%. Like, I'll give you a non-trading related example.
Yeah.
How many times, the key is repetition and training. How many times do you think Cristiano Ronaldo has practiced his free kick? With standing like with his legs like this, and how many times do you think he has measured every little thing of what he's doing there, and that's the thing. As you work with data, and every successful athlete does it too, they track the shit out of everything, but as you look at your data and you live with it, you understand it better. You have more an approximation to say, what should it be? How far off am I? And you understand also better in what areas you need to change. So when you look at, obviously, if you look at your risk rewards, because everybody wants a larger risk reward, obviously, that's, it's textbook, like, but the reality of markets doesn't always give you that, symmetry in risk rewards, So you've got to look at that from a flexible perspective, but you've got to know your numbers. Like, what is your average risk reward over the last 100 trades, over the last 6 months, over the last year? How are you differing in the last week, in the last 10 days, to see. I'm always looking for diversions from my usual metrics. When there is a something that is off, then that's a matter of attention, and so that's and as you understand what you're trying to do, your strategy, your typical way of handling it also, then this is where actually the learning starts, because a lot of people also, they go into TradingView, they do back testing, which is better than most actually already, if you get to that level. But, just clicking through candles isn't going to do it neither, because then you go to the market and then you realize, damn, those candles move in between candles, and there is actually a P&L and a position that I see here that's actually hitting my nerves as well on top. So you've got to train yourself to that. You've got to become expectant of the stresses. You got to expose yourself to training situations, that are not bullshitting. You see the right side of the screen and you just click through it. That's not going to help you when you don't see it and you're in real life, Exactly. So what do you think a pilot does before he's allowed to fly a big ass plane with hundreds of people in? He needs to go into the flight simulator for a long time, and make sure that he understands what he's doing. And I think that trading is exactly that. Most people, they try because they think it's easy. Then they have a little bit of luck and they think it's easier. Then they put in more money and then they lose it all. Then they said, okay, it was easy in the beginning, so I can do it again. But what they do actually is they're not repeating a working something. They just randomly doing something and expecting results that would be constant in a random attempt, and that's not possible. Like, the math is against that. Even when you do a structure with like clear metrics, the distribution of profits is not linear. You have a 70% hit rate, doesn't mean you're losing 3 and winning 7,
Exactly.
So that's why you've got to understand your data. You've got to done back testing. You've got to trust your strategy. That's also important, because even when you have a plan of what you want to do, going out and doing it is the next level of challenge. Remember when I said earlier, every level has a challenge to it. Execution is also a complete challenge. And it's also something that's so misunderstood by many people. They go out and actually want to execute their trading strategy, but they end up doing all the shit that they didn't want to do, and they don't stick to what they're supposed to do, right?
And they don't follow what they're supposed to do. And I think, well, the biggest reason is because the market is extremely tempting. And theoretically, I think everybody believes in their head that they can hit 1 million, like with one trade or something, because it's theoretically possible. So people think they can get away with it.
But how much more is it possible to make money when you're actually knowing what you're doing, right? I mean, exactly. and like, of course, if you're in this to gamble, then fine. Who am I to judge over that? Like, seriously, I don't. But if you're here, you want to make this like something that can last and work and attract money and build support a life, you've got to approach it from a structured perspective. Also, I think I like to look at nature a lot of times, or, as above, so below. So the most successful things in our universe or in our existence are always structured. Whether it's, atoms that's structured into, a solid table or whatever, they become more stronger, or even to a bigger abstract thing, the Roman Empire that was the most structured empire of its time. That's why it had the biggest influence, had the most structured military, hygiene, sanitation, food, politics, all of that. That's why, because it was so much structured, it could expand so much more than ever before. It wasn't so tribal anymore. So structure is your friend and actually gives you freedom to needing to reinvent the wheel every time. Think about, like, if we get into our cars, I need to think whether our wheel's going to roll or not,
Yes.
So that's why you build structure. It frees you from wrong attention, and it also keeps your attention where it needs to be. And especially from psychological aspect, and this is what I like about trading. There's no way in succeeding in trading without conquering your darkness, right? Your inner fears, your personality, somewhat, and because you are the centerpiece of your trading operation. If you don't function, it will or you function in a certain way, then everything will be reflected on that, right? And so you've got to, delaminate, like actually disconnect a bit from yourself. You're an observer to everything that's happening. You're trying to put everything into order. You're putting effort into the right things. You measure your data. You try to solve your problem in terms of looking at what is optimizable and all of these things. You stick to your risks, rewards. You apply risk management as the trade goes like you expected it to do or not. You don't just wait out for nothing. And still, at some point you will make a mistake. And if you don't pay attention to that mistake, if you don't have it in your journal, if you think like, today was so shit, I don't want to talk about it anymore, that's the wrongest thing you can do. Because now you're not learning, you're not earning and you're not learning. You should never have both at the same time happening, okay?
Don't let the beating go to waste.
Yeah, exactly. So, and this is the time when you need to write it down mostly. Don't, try to analyze right away. And that's what I mean by execution. People try, I have this idea, I will try this now. But dude, you're not supposed to try something else. You try to try your plan to see how able you are to actually execute what works on paper. What you put in so much time and effort to create in the first place. So, and this is where I believe a mentorship actually helps. This is what I do. I don't sell a trading strategy or the secret, whatever, kiss my ass shit, but I help people and support them on every step of their path to find their own strategy, to develop their own skills, to discover their own weaknesses and strengths, to start to find solutions for that, and that in an ongoing, persistent process. We have weekly calls, they have the ability to send me everything in a written way. They get answers in an online platform and all of that. We also have chats. They can talk to me directly. So but it's all about really the consistency, guys. Consistency wins the race. It's, you know, and consistency means you've got to put effort into understanding what you're doing so much more. Also, you know, the time of the day that you can trade, the markets that you look at, the job that you still have. You know, there's so many parameters that are relevant to your choice of what and how you should trade. And then also your ability to do it or not comes on top, the next layer, you know, and then it's repetition and training. I mean, look, because we talked about Raj, or you mentioned him the other day from Wix Don't Lie. I mean, if his stream isn't like the best fucking example for consistency wins, then I don't know what is, you know. And you know, if people still listening to the Lamborghini idiots, then dude, they're not supposed to win. Then they actually want to lose and be scammed. You know, you do it once, you know, not my fault, but do it second time to me. Do it. There's no one else to blame. You know, that's also good about trading. Self-responsibility is a big topic that there's no way around it. You know,
nobody to blame. There's nobody.
Yes, and that's good and bad. Obviously, it's bad if you can't deal with it, and then you say, they're all idiots. It's just gambling. Nobody knows how the shit works. Yeah, of course, because most people do it in a wrong way and wrong expectations. And what ends up is they getting eaten. They are prey because they were too naive.
That is true. Very true. So this is something like that I stress about a lot is having a system. We repeat. My students know how much I repeat over that and changing it and journaling. And I tell everybody, if you're not journaling, like, you're not taking this seriously. Like, this is the way where you will catch your mistakes. You will not, from a metrics point of view and from a technical point of view as well, you will not remember all candles and all charts and all mistakes that you did. But I want to get, now that we have talking about this, I want to get a little bit more into some technical details. Like, on the first podcast we had Raja, Wix Don't Lie, and he was very strong on, obviously, before I say that, I have to say there's 100 ways to trade the market, there's 100 different styles, and there's 100 different systems and 100 different strategies. There's not one that only works. So by saying that, he was very big on trading the same pairs at the same time during the same session. All right. So I want to get your opinion on trading the same pairs versus having the same technical strategy and going through pairs and just looking for that opportunity. I think a lot of people that begin in this industry don't know which way they're heading, and they end up heading by, like, finding, for example, like 61.8 retracement, and they just flip through trading view until
because it looks fancy, right? I mean, there's some magical stuff going on there with Fibonacci, and then that looks good. Let's do this. It feels good until it doesn't. Because it's not that simple. I think, first of all, I'm a huge admirer of Raj. I think he's doing a fantastic thing there. And if you asked me, like you said in the beginning, there's a million ways to trade, and I agree with that. And actually, that's what I do. Like, I have a spectrum of students from all over the world, first of all, and also from advanced students that already manage money for other people or have a couple 100,000 FTMOs, to people that barely know what a candle is. Because, look, I want to be the #1 person in the world that understands every person's struggles that wants to become a trader. You know, that's my goal. I don't want to teach my system once. I want to understand everybody's struggle, understand it better than anybody else. So that's why I want to see as many people as possible and understand what's really their problems with that. And so what I have seen is that, especially in the beginning, the reason why people look at many pairs is because they're fucking impatient, and that's wrong. So if you can strategy that works on one pair and one specific window of time, then and only then you should look at something else, in my opinion, especially when you get started. Because when you're all over the place, then you're using it's just an excuse to, see things that may not be there, or you know what I mean, and or just have, you know, that little bit of that thrill kick, that junkie behavior, like, okay, that trade didn't work, like maybe this one, or maybe the other one, you know, like, you know what I mean. So we get into all these toxic spirals that I believe really restraint and discipline is a core competency that you need in trading. And the way to cultivate that, especially in the beginning, is to trade only one thing in a specific window of time and become an expert with that. I very much support that approach. That said, I do have students that do it differently, and I'm not here to convince them of my opinion. You know, I'm here to support them with theirs and really making producing the proof or the disproving of their opinion. You know, that's what we work on. We really, I don't fucking care what I have as an opinion. I need to prove myself, you know, at the end of the day. I need to hold myself accountable to the same levels, to the same standards. So, but I certainly believe that you overwhelm yourself by trying to do too many things at the same time. You're missing the lessons. You're missing to try to really, you know, pay attention to candles, to what happens there, the fractal nature of smaller and larger time frames, what it may tell you, how maybe, you know, stuff like breaker structures, moving averages, Fibonacci's may add a layer to that or not, depending on what you're doing, you know, and really, you know, if you want to use a Fibonacci, okay, then you've got to decide what am I using it on, which time frame, starting from what level, you know, and then you've also got to do your back testing and figure out which way is the one that works statistically the best, not just for the last 5 trades, you know. And then you also have to try, what happens if I stop using it? Does it change my results or not? Because we add layers of complexity sometimes that we believe are smart and make sense and are sophisticated, but they're actually just stopping us from making decisions, you know? And,
because so, I think you add too much stuff sometimes that they start contradicting each other, and then you'll
yeah. And again, when you somewhere in your mind think that, you know, this is so difficult, nobody can really make this happen, then you start to self-sabotage yourself. You know, it can't be that easy, right? If it's successful, it can't be easy. Well, and again, I think Raj is another proof for that it can and is easy the way he does it. It's not simple to do, you know, it's not easy to do. To consistently, because he had to train for that years, day by day, and he did it in front of everybody, you know. And so this is the it's the perfect example that effort beats talent. Also, you know, the stuff that he learned, everybody can learn that, everybody can see that, everybody can join the streams and see that. But to do it and to stand up every day again and again and again and do it for years and continue to do it and continue to do it and continue to refine and continue to do it, this is where success comes from, okay? And it's not the super strategy, the magic solution, you know, the genie in a bottle.
No, absolutely. We don't believe in the magic fifth level, in the magic like this, and the reason I don't believe in them is because I've tried them all. That's the main. I went through them for years and years.
And also I have a number of different strategy running depending on what the market is giving me. Like last year I had a couple of also manual trades. I traded silver up for a long time manually, for example. But I also like to trade, you know, pair trades. I also like that because then you can look at the how far do they diverge from another, and you can try to trade rather something statistically, some linear regression approach. But again, I'm not talking about martingale and grid systems. That's super dangerous, and they look so fantastically well when they work, so that everybody just wants to have them, but they're not considering the risk of a 100% loss like that. And this is what happens to every grid at some point, you know. And but you know, well, we can touch on that some other time. But they're definitely, I like to, you know, the thing is that when you have a larger amount of capital, then you don't need to make 100% on your account. You know, you don't want to, because the amount of risk you're exposing it to, that's the challenge. You know, you want to make a return with as little risk as possible. So you look for risks that are for you controllable more, and that may not be just a naked trade. You know, you could you trade pairs, like, like that have some correlation to each other and stuff like that, and a simple example, WTI and Brent are both oil, but they are different prices, and they have a difference between the price of each other. And sometimes it goes off, sometimes it comes back, but that range is still, like, it's still oil, right? And but again, then those type of strategies it depends really on your ability of time and focus, and also the way that works for your personality. What I like is the idea, again, to bring it back to the strict 2-hour trading or 3-hour trading a day, is that you go there, you have a specific expectation, you have a specific time expectation, a specific job to do, a specific description. But this is the positives of what Raj has created there. You can create that for other strategies as well if you have such a strong specific expectation of what it is that you're doing, right? And you just got to keep on with that and make sure that you're in your analysis that this approach actually has a positive expectancy, and if that's not the case, then there's no point in trading it. And then there's also strategies that look super nice at backtests and paper, but they're not tradable in reality because they capture half a pip, which is eaten by slippages and or some arbitrage stuff that you get shut down quickly, or there's loads of things that are, and that's kind of the thing. People always look for these short-term things, the quick short-term buck. I mean, and less the long-term learning and doing, trying, failing, learning, getting better and making it approach, and but that's why what we're doing here, right? I mean,
I always say, like, if the other methods worked, like we would have profited big off them. If signal channels worked, I wouldn't be here today. I would be still a member and making millions. But
right, exactly. Sitting at the beach, right?
But there's 2 points. There's 2 things you said that I would like to retouch on and maybe talk a little bit more. And so a lot of mistake that a big mistake that I realized is people or members or traders look at their profits in terms of value instead of ROI. So in terms of, like, I just made 5% this month, but it's only $500. Like, $500 doesn't change my life, doesn't do this, doesn't do that. On the other hand, and I say this because a lot of our audience I know comes from social media. So a lot of them I'm sure they come across like profit photos and screenshots and blah, 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 and whatever. And we'll take an example, for example, from Raja's mentor, Uncle Ted, when he, for example, posts like 300, 500,000, 600,000.
Huge gold trades mostly.
Monthly results. But then the thing is, when people see that, they forget that this is like a certain ROI of his account. So maybe he made, let's say,
I think it's
5%.
even more than that. Like, I think at the end of the day, it's mainly perspective. Because yes, for in a percentage wise to look at things is very important, and also, but again, the long-term approach, they just miss to see that, they see, okay, 500,000, 20,000, 50,000, but how much is that in total? And also, he's able to do it again and again. That's the more important part, the consistency part, really. And if Tony Robbins says you get what you tolerate in life, if you settle for being tricked by pictures or being picked on by screenshots, and then you're not made for this, or maybe you've got to figure this out first, that you're not, fall into honey traps like that anymore before you can actually proceed to the next level of your challenge, and but that's the way I see it. If there's certain lessons, if you don't get them right, then even the best working strategy wouldn't work for you, because you not have the right way to do it. You wouldn't have the discipline, you wouldn't have the patience, this is where I'm really, I don't know how to say that, in a positive way, but really people have to stop wanting things easy or expecting they can happen just easy like that. Like, why don't we give what we want to get from life, And I think the more we have this approach, the more we actually are able to achieve that.
Yeah. No. The reason why I touched on that is because I've seen people with like not the perfect strategy, but like a good system that's working profitable, that's consistently. But because they started off with a low deposit and the profits from a P&L perspective is low to them, which is a preference, of course, because that's
But look, my answer is the same. It's again perspective, because look, guys, I just told it earlier to you here. How did I level up financially? I traded other people's money. I created a track record of 24 months and raised money and got other people's money and started to trade a large amount of money that made me money because I made money for them. This is how I. So if you only see your 5% as $500 for that month and don't see it as a piece of a puzzle to that way, then you've lost already. You know, and if you look at the 5% per month, which is a great number, by the way, as not one stepping stone closer to consistency, to being a reliable, look, there's so much more money in this world than there is good investments. You really think that you're gonna be stuck with your $500 if you can make 5% returns consistently, or 50% a year, or any of that? You know, you're not gonna get stuck with your $500. Like, come on, you're lacking perspective again and focusing on the wrong thing. You know, but if you can, you know, trade a $500 account for a whole year and show consistent returns, you know, and no blowouts and any of that, and I promise you, you can raise a large multiple of that as people that want to invest with you. You know, and so you're focusing on the wrong thing. You know, people put the horse behind the cart and wonder why it's not fucking moving. You know, it's because
No, I get it. Yeah, absolutely.
So it's perspective. Like, sorry, I don't want to make this like just a philosophy round here, but it is, in my opinion, you know.
You know, it's not about philosophy, but it is the main obstacle of trading is psychological, and is like
yes, I agree.
Yeah, so it is a big part of it. And one more thing I wanted to touch on is, and I've received a lot of different like advices on it, and I've seen different strategies. Compounding versus withdrawing profits. You know, with compounding, obviously we know the attractiveness of it is that you eventually hit that magic number that you're looking for, and you do it at a much faster pace. While withdrawing, you're kind of it's looked at like you're slowing your process, kind of slowing the growth, because you're taking capital out of your trading account. So what's your take on that? Compounding versus withdrawing profits?
Well, okay. Like, first of all, again, it's a personal decision. Do you need the money that is in there? Do you don't need it? You know, then also, I think, what are you trading this account for? To compound it up so quickly and strongly for yourself, you know, to have the amount of money all by yourself, or to build a record that you want to, you know, present to potential funding opportunities. So that will require a different approach of how aggressively you trade your account. And I think also, when you see an account that has never had any withdrawal, and you start questioning its reality, if it's not maybe a demo or something, you know what I mean? So that's another thing that has nothing to do with the psychological aspect, but just an aspect as if I looked at it, it's a question I would ask, you know. But I really think it's about your goal mostly. So that's why I don't think there's a right answer per se. Both can be right, both can be wrong. Like, if you, and it also has to do with your psychology, if you don't take out money from the account ever, and you don't feel any sense of achievement just to see a percentage on your MyFX book or whatever, then yes, pull some money out and hold it in your hand, go have a great steak, you know, like, see it's real, you know what I mean? That's it's all about keeping your mind in the right place to keep doing the right things, you know, and that gets you to your right result. It's really gets one thing leads to the next. You not go instantly to that, and so that's why I think compounding, or not, I don't think you to say that I don't think you will compound your own account from zero to hero completely in a strike, like, or over in one account or in one strategy or in 1 year. I don't believe that. I haven't seen that. I know there's loads of that going on in social media. I personally have my problems with that. But, you know, my reality is not the reality. It's merely a perspective on reality that I have. So it doesn't mean that it doesn't exist, but for me, it doesn't. I haven't seen it in so many years, not in hundreds of traders.
Yeah, understood. So it would depend on the trader's personal goal, what he's looking for. what he's aiming for, and then he can
look. I mean, in shortly spoken, every trader is looking for the ability to live from his trading, or to make money from that, and then I guess everybody wants to at least rent a Lamborghini once that isn't forex. So you still look, if you are really committed to your long-term goal, then you'll do the right things, or you'll have to focus on the right things. And the long-term goal is that you want to live from your trading. Then there's different ways to do it. You can try to I don't know, maybe you have some parent pension like I screwed up 100K or whatever, so that you target to make a couple thousands of that per month. That's it is a possibility. But also think of the stress and pressure to have your family's money on the line always, and so that you've got to grow beyond these things first to be able to handle larger amounts of money. And so instead of thinking of only compounding your own account until infinity, because it also gives it a bit the feeling of being, like not real, like something virtual only. Try to bring in other people, put your account on MyFXbook, whatever, try to get followers on some social media platform, try to expose yourself and see if there are people that are interested in what you're doing, and try to convince people of your mission. If you can convince a single person, then chances are it's not as great as you think it is yet. There's ways to work on it, obviously. And again, getting a negative feedback or something is nothing negative per se. It tells us that we're not on track. So it's just a signal to go back or to take a different direction. We shouldn't, if we identify with our disappointments, weaknesses, or closed doors, then that's all we ever going to obsess about. And that's all we're going to see, closed doors. We're going to think of solutions, open doors, and other ways. And I think a good way to prove to yourself that what you're doing works and that you're on the right track is to get other people that approve or disapprove of what you're doing. Doesn't mean just rely on social media people's opinions. Like, then you're lost. Okay, don't ever go there. Build a peer group.
Also relying on your journal, and you're seeing the results, the effectiveness, and
but build a peer group, build like an environment that cares for the same values, that wants to achieve the same things, or that have an aspect to it to give, don't be that lonely knight in the night, basically, only, but attach yourself to people that are really looking to achieve the same. That's what I love, by the way, also about and you may have the same about my students, that it's only people that are really committed to bettering themselves and learning the craft of trading within the context of their own situation, psychology, whatever it is. And that is that is a puzzle that you it's your life. Come on, if you don't want to solve your life's puzzle, then what else you want to work on? What's left there to do? And so you have to be patient. I see a lot of these young guys that really think that 5 years is like eternity, when it's a blink of an eye. Even 10 years is a blink of an eye, if you ask me by now. And I don't feel a little bit different than when I was 16, to be honest. I'm just a few numbers older by now.
but no, I believe,
so this is how quickly it happens. But tell me,
because I believe it's because, like we said, a big part of it is psychological, and I think a lot of people believe that it is like their dream life, or is achievable in 1 year or 2 years from when they start from scratch, or they don't expect, I always say, the more I trade, the more I see how longer the journey is, the more I see how in depth you can
yes, the way I see it is that growth happens in random leaps. It's not linear. So the linear part is the training and the trying to learn and stick to your tasks. That's very linear, very repetitive, very dry, very boring, very, requires discipline and, not seeing the goal and all of that. But these things accumulate. And then in German, they say der Tropfen, der das Fass zum Überlaufen bringt, meaning that last drop that makes the water in the barrel spill over, and that's kind of, that's that. At some point, there's a leap. When you consistently do something, you suddenly understand something faster for some reason, and that leap is what people overestimate how large it is, and B, so they don't even see it even when it happens, and B, are very, impatient about, if it hasn't happened now, it's not going to happen, or if it doesn't happen in the next 2 weeks, because this is when my parents come back from vacation, so I want to show them I'm now a forex millionaire, or whatever, it doesn't work like that. But also, by the way, if you have a family that disapproves of you trading, show them what trading is doing to your life, how it's developing your character, your personality, your trades, how you're working on yourself, your discipline, your habits, your intellect, and as you work on all these things, it will spill over in other areas of your life. And then nobody's going to tell you something about trading when it has all these effects on you, and so. And it can, if you see it this way, if you see it as a sparring partner, it's a challenge in this world that's supposed to make my life difficult at times in the here and now, so I can grow the skills and the personality, or the person I need to be, the personal development, in time to grow beyond that. And that growth actually, and that's the funny part, and I think that's also, you see it in every Hollywood movie, it's kind of built a bit in the structure of how this universe works. It's actually called the hero's journey, that before it gets really good, it becomes the very, very worst, and that's typically really, if you see every setback as a stepping stone to further, the Stoicist says that, I like to talk about Stoicism. It's like a Roman Greek philosophy. And they say that when an adversity happens to you, then don't say, poor me, that this is happening to me, but say like, great, this is happening to me because I actually have, I know how to deal with this. I know how to, endure this. I know how to fix this, and so these challenges, you see them as something that you welcome into your life to make yourself better. This is what you live for. You don't live for the result. If you live for the result, you're dead already. You're not, it's that constant grind that really trying to constantly improve, trying to like the water stream against the rock, in a way. That's kind of our life's purpose.
And it's fun as well. I don't know if a lot of people,
it is.
I do. I find it extremely fun because maybe
yes.
I'm passionate about it, and I'm passionate about solving the next challenge and figuring out the next barrier. And
I love that you say that. I tell my students, I feel sometimes like a nutty, crazy professor, waiting for his next experiment if Frankenstein's going to live,
Yeah, we had it the other week where I tried to just like change something in the strategy, very specific technically, and it didn't work out. Then I changed it again, didn't work out. I changed it again. And I think one of the members, he still knew, he texted me, he was like, why are you experimenting with us? I'm like, man, I'm not experimenting. It is fun.
That's the process. But by the way, that's why I am more a supporter of people learning their own strategy or getting their own self in that process, because that's exactly the reason. You try to copy someone else's thought process, you're only able to do that so much because you're not the same person. You're not thinking the same way. You and I, we see the same thing. We don't, we don't feel the same about it. We don't have the same feelings about it. We don't have the same memories about it. We don't have the same triggers about it, and so as you try to just take over somebody else's strategy without really internalizing it completely yourself, you will have problems with understanding it, and you will have problems understanding with developing it. And especially if your expectation is to receive a McDonald's meal that you just consume, and so this is, and that's why my approach is no. People come to me with failed strategies that they used in the past with their old mentors, whatever, and then they want to start from scratch completely. I say, look, I spent years on this, it's not working, it's all shit, and now I come to you so you can show me how it works. And actually, what I make them do is to stick with what they have learned. Is to tell them, you know what, we start from scratch. You start to sketch out, to write down your trading plan now first, and then they tell me, should I start from zero? Should I use something that I already know? And I said, well, look, use that you feel comfortable with. And then they usually come with some sort of a variation of their old strategy. And then we start to dissect it. you've got to think in first principles, not in form, but in function. What is your entry for? What is the function of your entry? What is the function of the strategy that what you're trying to capture in the market exactly, and in which form can you capture this function? You know what I mean? And as you go through these ideas, even with the strategy they already know, they start to develop into other ideas and delve into other things. So I had students that started being swing traders and ended up being pre-London Open scalpers, and it fucking works for them. And it's their own thing. Yes, there are elements of Raj at play maybe here, or elements of someone else's trading strategy. But isn't that what's it about, to make that work for you personally? That you can go out, you understand it so much that you start your own variation of it, and you're not just looking for someone else's approval or help, but you're actually able to do it yourself. That's the kind of skill set that I encourage and train with my students. That's what I teach them, a lot more than a single trading strategy. Not at all, actually.
100%. It's developing your own system and changing your strategy accordingly to work out what's best for you.
And strategically, based on data. I mean, the most successful companies of this time are data companies, whether it's Facebook, Google, Amazon's all. And actually Facebook started out having all this data, and then they needed to hire people to figure out how can we make money from that data. They didn't know how to monetize their whole business model, but the data brought the money. And it's the same for you. Like, you've got to look at your journaling, your backtesting, your screenshots, all of that. Keep a clean journal. There's great tools, by the way, also that you use that. Don't be, and actually there's a good, there's a positive result from also doing your journaling manually, or go through it manually again, is that you just expose yourself to what you're trying to look at in a market. Also, as you create a journal and you have several screenshots of every trade that you make or have made in time, then you see, okay, how did the market look before the trade, when I entered the trade, after the, that's also something that I try to do. People learn in different ways. Some are, are better readers, other are better hearers. Third one needs to see it visually. So I try to stimulate every aspect, but I think the visual aspect, since we're always looking at charts, is a very important one in trading. So if you're trying to build a trading strategy without actually using screenshots and, a succession of screenshots on every trade that you make, and really are able to scroll through that over a significant amount of time, then you're really able to see your own movie, your own story going on there. And then much better as you are then on the battlefield, in the heat of the moment, what to look for. And again, I think this is what Raj is doing, or is showing pretty well there, and he understands the landscape he's in. He's only looking for these couple hours, only specific markets, and has a very clear expectation, understanding of certain levels and how he breaks them down from largest to smaller. Also, he doesn't go back to the monthly and until the end of time, just get it all down to the smallest, with a 10-to-1 risk reward. That's the other side, when people come like this, you've got to, only trade with the trend. And the trend starts at the 10 yearly, okay. So I'm kidding now, obviously, but you know what I mean? Like, you can also do the wrong things with the right information.
Yeah. And this is why risk management is key.
Exactly.
If there was a way where you could hit it every time, we wouldn't be risking 1% per trade or whatever, But so I'm happy you're stressing over the point. It is over, all the questions and all the topics, they went and they surrounded by coming back to having a system and changing and adapting to the market and journaling and realize your mistakes and accepting that you will continue to make mistakes and changing them and keep on finding the correct way for your strategy.
Yes, you're making mistakes now to learn from them in a controlled and in a documented environment. That's how you level up. Exactly that.
Yeah. I want to get into something a little bit different. Well, let's talk about a little bit the all-time highs achieved right now in the stock market and in cryptocurrencies. A lot of hype right now on crypto, especially with Bitcoin and
so I think what we're seeing might be historical. Maybe it's an overstatement, but we'll find out in time. But I think the combination of what we have is definitely something that we haven't seen. So we have a a broken economy. That's for sure. I mean, everybody fucking shut down still is, there's no way that this economy is producing the amount of income that it needs to sustain right now, and, I read your article about deflation. That's actually it. You increase the money supply. That's what the central banks did, trying to fix the problem somehow. But the velocity of money is not, meaning the money is not changing hands, not going through the channels of the economic system. And that's why people are not spending money. So essentially, logically, prices should come down, but they haven't yet. The reason I think that is the case, so I'm not too much a deflation advocate, to be honest. I think that we already have inflation, is what I think, and we see that in deflationary assets like real estate. Everything that is supposed to be a store of value over time is getting more expensive, or has gotten a lot more expensive. That includes stocks. And that's why stocks have delaminated from their fundamentals. It's not about PE ratios anymore. It's about that my money today is not less worth half of it in 5 years from now. And that's the dilemma of every cash holding person. So what are you going to do? So you're going to buy real estate, right? Or you're going to finance real estate, even better. So the rent pays for it, essentially, eventually, if you try to make it work. Until the rents are not paid anymore and you have 100 leveraged units, and then that's a different story. So I think that right now we already have inflation. I think these all-time highs, as ludicrous and crazy they seem from a PE perspective, I think they might actually continue to exist for as long as people are not having alternatives. And the alternatives are there. But the question is like how much they're willing to see them. And here I'm not talking about crypto as a space completely, but I'm particularly talking about Bitcoin as a store of value asset, and we've all probably seen loads of Michael Saylor's interviews over the last months, and so we don't want to repeat everything the guy said, but I think he stresses a good point. It's about how can you, like, money is an energy battery, right? It's basically, instead of me needing to go take a boat, go on the sea, take a fish out, bring it here, I just give someone in exchange the energy that he would spend to do that, and then he gives me the fish, right? So that's what money is for. It's a means of exchange for work and time. And so when you have money, you want to store its value. You want to store its purchase power. And that's something that I believe, when you look at the tech stocks, is maybe a more of a gamble than Bitcoin in the next 10 years. Because yes, tech stocks have no alternatives, but they might be subject to much stronger regulation, or even broken down, or any of that. Or the ad landscape can become a lot more difficult. I mean, everybody who runs ads online knows that the way it used to be, which is only a few years ago, and now it's gotten a lot more expensive. It's much more harder to target and all of that. So I think that these big companies are in for a bit of an awakening in terms of the potential for growth. But essentially, there's no alternatives to them. So that's why I think, like, keeping their stock without like a big setback first would be too much. I wouldn't buy at these levels. I'm not. So
I was wondering, because I see a lot of people who don't usually invest and are starting to buy the highs, and usually that's like a big
yeah, I mean, we saw it in 17 with Bitcoin, right? Everybody, everybody and your taxi driver, everybody was asking you about Bitcoin. And I think the difference, by the way, because I mentioned that as example to stocks in terms of Bitcoin, is it's decentralized aspect, that it doesn't belong to anybody. Nobody can control it. You got to shut the internet down. Of course, there's issues like, the amount of whales or China or whatever. There are, like I said, every level comes with its challenges. But in comparison, the ability to keep all your net worth with 24 words in your brain, transcending space and time, meaning time is you want to keep the value, right? And space means you can move wherever you want. You can buy gold. You want to save your worth over time. Buy gold, because gold will still be worth its money in 10 years, 100 years, whatever. But gold, you've got to store it somewhere, right? You've got to protect it. It's not movable so easily. It costs money to move it. So, and if you compare that to Bitcoin, it's deflationary because, there's only 21 million. Most of them are actually already mined. There's probably a lot less real supply than we believe due to all the lost and whatever situations. And so from that, and it's not controllable by any one government. It's decentralized. It has not been hacked. There's more interest from the institutional space then you have a Michael Saylor, a MicroStrategy investing $1 billion at their treasury assets. You got to understand what that means, treasury asset. They're not buying Bitcoin to speculate. They're buying Bitcoin to store their today's money value in it, and if you compare it, bonds are mainly yielding negative. Gold has, challenges and it can be confiscated. That comes on top. Gold can be easily confiscated. Like, what do you got to do if you hoard 2 kilos gold, when the cops come banging your door, and we live in a time where the economy is that the stock prices are completely delaminated from their fundamentals. The central banks are pumping in money like crazy. The lockdowns are not ending. All of that points to an increased necessity of store of value. So since you asked all-time highs, you didn't say if we're talking about traditional or crypto market. So from a Bitcoin perspective, I'm a dip buyer still. Like, actually, I've been for years and I continue to be. And every time I buy the dip, I'm sad about that. I did buy more, but you gotta have a plan, a system. You can't expose yourself too much. Also, I'm not like Michael Saylor putting all my eggs in one basket. Maybe in 10, 20 years from now, I wish I would have, but I'm still exposed fairly enough for my taste. The upside is large. The downside. I've also had, investments in late 17 in Bitcoin that took a couple of years to come back, but I had some from early 17 and before that, I was able to sit this out, and it was money I don't need,
Exactly.
And again, the smart thinking was, like, if that's compared to a pension fund. So do you really think in 50 years from now, with all these fundamentals, with all this screwed up economy and all these issues that we have, this enormous amount of debt, this no interest rate in the world anymore, do you really think any pension fund can perform for you better than just putting your money on Bitcoin and leave it there for 20 years? I don't think it can.
Yeah. No, absolutely not. Especially if we're heading in that direction technologically as well. Like the world is, even if it's not Bitcoin, but I'm talking like cryptocurrency as a concept. So absolutely. And what do pension returns are super bad, like per year annually. So absolutely.
So there's an exodus happening, and then people will ask themselves, why would I put money with Melvin Capital that get, squeeze the shit out of them? If I can just buy Bitcoin and do nothing.
Well, I think Bitcoin yesterday rose by like 20%.
Yeah, it was crazy. That's Elon Musk. So that's another thing that Bitcoin, in my eyes, still needs to do. It needs to grow more market cap, so it has less volatility. Right now, because Elon Musk put Bitcoin in his, I think it was Twitter handle or something, and then it went up like crazy, and it came down quite heavily as well. So right now, we still at yesterday's high before we had the big push. So that's I think dips are buyers right now. I'm personally, I like that. I have like from under 30,000, I'd be buying for sure.
Yeah, of course, guys, with the correct exposure and the correct risk.
Yes, this is no investment advice to make that sure. It's just my personal opinion. Everything I said today, by the way.
I'm not responsible for anything. No, absolutely. I agree with that as well. I personally haven't touched crypto. Like I did 2 years ago. But I traded it. I didn't hold it, and I was scalping it, and it just blew me. I liquidated my account so fast. It was like at the time.
And really, everything I just said about crypto, I really meant more about Bitcoin, and only in a hodl type of situation, like buy and hold. Because we were talking about stock markets earlier. Everybody would think, you buy the S&P or whatever, some world ETF, and have some fair exposure to the world. And I think if you think in that context, like in the traditional world, that emerging markets have a lot more of an upside potential now than actually the US, in comparison. So if you want some exposure, get an emerging markets ETF is a simple thing to do. That's it's not so complicated, and you can have some exposure there. I know a lot of people, especially in Germany. Germany is always, Germans want to be over safe, uber safe, you probably would say in English.
I don't think that's
But Germans are like the pinnacle of that, and on top,
I lived in
So
Sweden in for a couple of years, and I believe that was the same attitude. Like, yeah, but yeah, extra safe, extra, no risk.
And I don't think, by the way, that betting on the S&P 500 for the next 10 years is a very safe bet as it was the last 10 years. I think it could be, have you looked at, for example, I just want to invite people to have a look at the Nikkei in Japan, because the Bank of Japan was the first central bank to adopt quantitative easing measures. And you see there was a huge spike in the Nikkei 20 years ago, something like that, and it never came back there, not even today, and with all this overheating going on. And who says that can't happen to an S&P? Okay, if you think of the tech stocks, that they have like potential for growth, but again, then you have the regulation risk, just the risk of them being already too large, and that something might happen there, or will be curbed. But a really good example is to look at the Japanese index and see how this thing decades ago spiked already like crazy, on more or less the same kind of thing, and then never recovered yet. So that's why I'm saying, like, just believe that stocks only go up. No, they don't, and just because, yes, maybe over 40 years. And then again, the question is 40 years of stocks versus 40 years of potential, Bitcoin deflationary maximum availability, all of that, to me is an easy pick, but everybody needs to make their own choices here and understand why are you doing what you're doing. So I'm not looking to trade. This is just money I leave for the side. And when I grow old, I'll look at it and be probably very, very happy, and that's why I do it. It's not for trading. It's not for in and out. Also, the crypto space itself, it's so fragmentized. There's so many, coins and exchanges, and that's crazy. Plus, it's an immature sector still. It's much more mature than it used to be. Regulation, safety of capital, all of these things are more of a concern. And they are a concern, but they, in some way, they only need to stay in a concern, because if there would be controllable completely, then it wouldn't be Bitcoin anymore. Like the great thing about the Bitcoin is that you put it on a cold storage, you memorize the seed phrase, and that's it. You're literally carrying your millions, hopefully, in your brain.
Like a big part of why crypto is because of the security, obviously.
Yeah.
If like the security or it gets hacked or anything, the whole thing, just the whole concept just crashes, I believe. So but yeah, but it's really the reason why I don't trade it, I'm not even holding it, is because I don't understand it. I still believe like I need more data, I need more experience, I need to dig into it a little bit.
Yes, and there's a lack of that. And I'm really just focusing on two things, mainly Bitcoin as the genesis, the originator of the idea, and also the so far never compromised network. And talking about Metcalfe's law, network effects, they get stronger as they grow more and more and more. And that's why it really has a very good outlook and potential. And Ethereum, maybe, something more like a transactional level of a cryptocurrency with all the smart contracts. And really, it's all about, look, if there's one thing the internet showed us, is that it's removal of middlemen, and it's just happening to the financial industry. It's going to take time, and we still have confusion along the way of what it will be. But I think that Bitcoin and Ethereum are quite a safe bet long term, if you look at them.
All right.
But please don't buy highs. Like, still try to buy dips when you get into something, okay?
All right.
So there's a question about what I believe about GameStop. Should we touch on that?
Oh, yeah, let's do that. GameStop, by the way, that was a hilarious story. I like the way it happened, and the way Elon Musk interfered as well is absolutely hilarious.
This movement that happened there is just insane, and that's again why I'm so grateful and happy to live in these days and in this time and age, that like for the first time ever, there was really a way for the little guy to sting back the big established Wall Street structures, and they didn't like that. And I think what it also shows us, and this is maybe even the bigger thing here that nobody has realized just yet, is that the system that we deem the traditional safe financial system is just as fragile and not safe and as crypto at the end of the day, if you want it like that, that it's just as movable, just as manipulatable, just as subject to just certain trades being opened in a direction and reaction of price, and that may scare a lot of like large market participants in this, and that may in fact destabilize the whole thing, and like, again, that might be now a little bit, I don't want to do this fear porn talk, like it's not just to make that it sounds negative, but I think that the combination of all of that, like the financial system at its outer boundaries of stability, whether it's stock market or the money supply or the money velocity or the economic income of governments because nobody's working, the shutdowns, like all of this combined is a very, very, very special situation, right? And so we can't just look at now and here, but how is that likely to change the landscape that we're in? And that's why I believe that there will be a competition for people's money, and I think that governments will lose more and more the grasp over the money supply. I don't know what's going to happen, to stable coins and that kind of stuff, whether they're going to be allowed to continue to be indexed to a currency. In general, it should be possible. So these things, they just require attention, your attention, and not to make haste decisions based on emotions. And that's what GameStop is. GameStop is, it's a way of the little man to fight back. And in a way, I'm also, smiling about that they really landed a hit, that they made it happen. Like I'm happy for the little guy here for sure. And I'm more a little guy than anything else. Like I'm a regular mortal anyway, myself, obviously. But this is what you got to understand about pumps and dumps. There will be losers, and there will be a lot of losers, and that will be devastating to those people, because the way a pump works is that there are early adopters, and they are the ones that actually make the money on it. Now, what we've seen in GameStop is now a couple days of being able to still be an early part of this wave. Now everybody thinks this wave is going to go until infinity. And it won't. That's the problem. Nobody knows how far it will, but at some point it will stop. And everybody who got in behind the curve, they will be burned and they will lose all their money. And because of that risk, and because we are risk aware and we're looking for risk reward type of relationships in our thinking, in our perception, in the way we transact with the world, I can't advise anyone to do that. Actually the opposite. And I think running and now what they did with Dogecoin, I don't know if it was also Wall Street bets, but supposedly it's great if you catch these things, spread. If you have money, you're fine to lose, spread across a little bit, just leave it there and wait for a hit, a little bit like ICO mania in 17. But this is not a viable trading strategy. This is not something you should do with your belongings that you need. This is play money. This is risk money. But this is not, and also this is temporary. People confuse temporary gains as something they want in their life, but it's not. Everything temporary is temporary. It's going to go away. And if you don't have an ability to bring temporary situations into creation again and again and again, you're just never going to have it again. So what's the point? You're just going to, most lottery winners end up more poor than they were before. And actually the suicidal rate of lottery winners is extremely high if you think in comparison to regular. So here we have people that are the fucking luckiest person in the world winning the lottery, and they kill themselves more often than others. So, what does that tell you? And so really, and if we close our eyes to these things, then we just that we deserve to run into these pitfalls, because there's no good reason to not know better these days. And that's why we have these conversations, so that you don't feel alone with these kind of decisions, or you don't hear it for the first time.
Absolutely. It is the conversion between temporary and permanent, and where comes in the middle, It is the thing that will get you to where any trader or what they're looking for.
Yeah, you have to be aware of your risks. Risks are super important. And if your risk in something like a GameStop or AMC or BlackBerry or Nokia or whatever, that risk, realistically spoken, is a total loss risk. So, okay, put the money you're able to lose in total. $1,000, I don't know. For some it's 50, for some it's 10, for some it's 10,000. You know, that's
different depending on the person and his person.
And you know, make an asymmetrical bet. These things happen all the time in financial markets. This is what options actually allow you to do. You leverage asymmetrical bets even with options, you know. And but again, it's a bet that you're taking, and it can end up losing. And you have to know that. So just jumping blindly on a bandwagon that you see on news is has so many conflicts that it brings with it that I generally completely advise against it. And so what you said earlier is actually a very good gauge to decide whether you should do something. If you don't understand it, don't do it. Keep your money.
That's my risk management strategy. You know, I was like, I don't understand it. I'd rather watch. I might miss the move, which is an opportunity cost that I'm willing to accept, instead of losing capital.
And you spend time to understand, right, your risk there.
I'm researching it, but I didn't find my way yet there. Like I'm journaling it, I'm trading it, like paper trading it, but I'm still like, it hasn't worked. I didn't find the sweet spot yet.
Okay. All right.
It's still unpredictable for me, or the reason, like, let's explain the difference between this process and the forex process. For example, the forex process, when I make a mistake, I can look back and understand why it happened. And I can understand the reason why the trade went against me and all the influences that made it happen, whether it was mentally, technically, or from a systematic point of view. My problem with crypto is I'm sometimes not able to answer that questions. So if I make a mistake, my problem is I'm not able to figure out why it happened, you know?
Yeah, 100%, yeah.
That it happened.
And that's why there's so many crypto coins I don't even understand anything about. So I don't touch them. I don't touch them. Like they some, you know, have interesting concepts with DeFi and stuff like that. So, but even then, if I buy coins like that, I throw a little bit of money on that. That's it. Like I don't take large positions, but for Bitcoin, I believe to understand it much better for my own enough to consider it a viable solution longer term over decades. So that's why I'm willing to hold it, and I control its security, and the rest is a gamble. Yes, we don't know how it's going to turn out. Can it go to zero? It could. Will it go? I think there's a difference between likelihood, you know, whether it's going to happen probably or you know, or not. And I think it's not so likely to happen for it to go to zero, even with bannings and all of that. That's but we don't want to make this a crypto conversation only.
I know, it's just the hype around it is
it's an interesting, important topic. Like I really think, you know, understanding online marketing, understanding the way to build a business online, understanding crypto, understanding financial markets, FX trading. Those are things that will help you become a wealthy person in this world that we live in today, from the comfort of your own desk, in your room, in your house, you know, and that's a potential that you want to, you know, consider trading your time against, you know.
100%. It's the reason why, like, I've became passionate about it, and it is rewarding more psychologically and mentally than it is financially. From my perspective, from my experience, it has definitely, like, the journey of trading has definitely changed me as a person, like 100%. And I believe
cool.
So
it's not just Fugazi, right? So you say it yourself, right?
No, absolutely. Because you realize if you, for example, you can't control your emotions outside the trading world, then there's no way on earth you can control the tempting market. And if you don't have the attitude of accepting mistakes, re-strategizing, changing, adapting, and all of that, then, and it's all applicable to your day-to-day life, day-to-day routine.
Yes.
And
so what else do we have?
Let's see, I'm looking through them. So we talked about the stocks, the cryptos, and withdrawing, the rules, and having a system, canceling trade. So maybe we'd like to I would like just to say, like, for people that are now new traders, let's say, or they're looking and they got I get a lot of people that like tell me, listen, I want to get into this, but I don't know anything. Like, I don't know anything about it. And so what would be your recommendation to maybe somebody watching the recording on you, he wants to get into it, but he doesn't have any background information?
All right.
What should he be looking for in terms of, like, the paid memberships or whatever, the groups or the mentorship programs? What should you be looking for? What are the, like, sort of check boxes that you should expect from the person teaching you?
Okay, so first of all, yes, don't just go for anything that tells you it's for free, because typically it means you're just being monetized in some other way. And if someone's taking money from you, it should be in a transparent way, knowing what for. Like when my students pay me, they know what they're paying the money for, and I'm not telling them it's for free, but you got to open by this broker, That's number one. Have a clear relationship with that person that you okay. Start with, you don't know anything. If you're talking about reading and writing level, learning the alphabet, go on baby pips first. Go through baby pips. That's the easiest way to see the very, very basics, completely free, really well done. I'm definitely recommend everyone to do it. But this is learning the alphabet. This doesn't show you how to trade, not even a little bit, and so just because you know ABC, you cannot write words, and much less books or stories, or you know what I mean? So that's the comparison here. So that's number one, what I would do. Number two is find someone, yes, that you want to learn from. Either, someone that is trading his own strategy, or helping you in your trading development process, but it needs to be someone that is really engaged in a process on a day-to-day basis. Someone that lives from this, ideally, actually. That's the number one. And that's sometimes is more difficult to find out than you think, especially with the all the screenshots and whatever going on. But when you hear free signals, run. Don't believe the guy any longer. This and so that's just another way to tell you, go to my broker that will pay me when you lose the money later on. So don't do that. Try to learn from someone that is committed to the details of his process, and someone that also will offer live streams, and ideally not only live streams where he's just quickly doing his thing and you barely catch up, but where actually has a good level of explanation going on, whether descriptive when he does what he does, or as he has group calls with his students or whatever. But really, you want to go with someone that pays attention to explaining a lot and not just doing his thing. And or even worse, there's also mentors out there that data dump their strategy videos on their students and say, okay, now you're on your own. When you have a problem, then you're the problem. And so no, you want to find someone that is interested and committed to explaining, describing, and also looking at you, talking with you. That you, especially in the beginning, if you just join a huge group, then you're typically not going to take a lot out of it. It's you're going to be hyped for half an hour, and before you know it, you forgot everything. But when you work with someone directly, you work on specific tasks, you work on specific, realizations and lessons, and that may be a process that will take you more than a day or two. So that's the kind of thing I would try to find someone that I resonate with, that and that is committed to his trading process, and to explaining and sharing that. That's what I would do as a very starter. What I would not do again is go with any trading signals, for that matter, to be honest.
I think a lot of people don't understand or don't know about liquidation share agreements with brokerage companies. And a lot of
and that's sad, because that's really okay. everybody makes money in this world somehow. That, every business makes money. So these brokerages, you just look, there's even publicly traded one, plus 500, they make millions and millions and millions as turnover, and profit. So where's this money coming from? Is that, you just look at it, is that money that the broker makes from transactional fees, meaning commission on your trades?
Yeah.
It's not, that money is, and that's why they need to also display it, is from their losing clients. Now, the broker runs a risk operation. It's very much like a casino, 100%, so they control their risk, they manage their risk, their exposure, their hedges, all of that. But essentially, the metrics are 90% of people lose 90% of their accounts in 90 days, so more or less. So all you got to do is just, keep people doing something. And as they do something, the math's going to play out, because they're going to do enough damage to themselves by themselves.
Yeah.
And that's kind of why this easy promises works so well with that, because people get in there, they do a little bit, maybe they're lucky, and that's again the irony of the universe. Many times they win in the beginning a little bit, and that then they're actually immediately, look, if you are asked to increase your account balance aggressively or more than once a month from your account manager, or even once a month, then you should also run. That's the next sign. So then you shouldn't do that neither. And also, what you need to understand, that this money is made because people are trusting the wrong promises, and that really is about you. If you believe that you can quickly find something that will just make you money on autopilot, then you will lose your money in forex, in gold, and it doesn't matter where. That approach means you are a naive prey, and some predator will come and eat you. See it like nature. Don't, you want to be an antelope being eaten by a lion, then continue to behave like that, and so really self-responsibility and self-awareness is very important. Now, and what you said, you don't understand it, don't do it. Just someone is pushing you from your friend circle to come into forex, this great thing, and everybody's making money. Don't run, really. I mean,
yeah, definitely. One thing you said about account managers saying increase your capital or increase your deposit. The thing I say would be, let's see if you have a different perspective on that. I would say, what I usually tell people that come in, it would be like, okay, how much should I deposit? How much should I put? Which is, of course, very difficult. It's impossible to answer, and because it depends on financial, personal situations, how much can you afford, etc. But what I always say is deposit a very, very small account, a small deposit for you, whatever that small is in your personal preferences, and focus on getting consistent results for over a long period of time. And if you can do that, then you have statistical proof that if what you do is working, and you can then deposit big, or you'll be more comfortable depositing a bigger amount, something that you can see nice returns on.
This is so important what you say. Only doing it this way, you qualify for the next level. Exactly. You gotta really see it, like that.
And after one advantage is you eliminate emotional trading, because you've already went through the process and you have done it live on thousands of trades.
On many trades, yeah.
And you already know the downfalls of it, the phases you go through, because of course the markets are not the same. There are market cycles that the markets go through, and what possible downside you have, what possible upside you have, what are your averaging. For example, you get bad months, for example, when banks close in August or whatever, low volume in January, and then after a period of time, you have this big journal with lots of data, and you already know if the strategy or the system or whatever the combination that you're having is working or not. Because like I always say, when I do live trading with my members, and a lot of them don't trade like me, but I also like to show what I'm doing. A lot of them just take the metrics from
which I think is good. It's very good.
And apply it to what they're doing. I have a lot of swing traders in my program, and I don't swing, for example. So after you have a lot of data and all of this data, you can then decide if you want to push forward with it and deposit more. and start making the real money you're looking for, or the
Yeah, I think it's so extremely important what you just said. So everybody just listen one more time, because I get this question so much time. I need capital. I need capital. What do you need to be successful? I need capital. And with capital, everything would change in my life. If I had capital, it would be, but if you're honest, what do you need the capital for? If you don't have the skill set and the results to show, all you got to do is burn through that capital, and you're going to be in much bigger trouble than before. The same like I started here, guys. I'm saying this because I made that fucking hurtful mistake. Like, don't do it. Really, it's especially if you're not, if you're, it took me years and years and years to gain my psychology back. Maybe that's the reason that's so strong today, but that's not a journey for everyone to enjoy or to endure, so you've got to ask yourself that question, if you're willing to do that, or if you're capable to do that, or if you want to put yourself in a situation where there's no other choice than to do that. So you work on your skill set first, and then you look for capital, because then you scale the capital and you don't minimize it.
100%. Like, yeah, and I always say, like, I get random questions sometimes. Okay, what do you think about this trade? Will it work out? Will it not work out? And my answer is always like, I don't know if this specific trade will work out, but I know if we do the same thing at the same time to the same pairs over 1,000 trades, we will end the problem. So I know that the result of the system. I don't know.
Yes, the questions are asked in a wrong way. If you get a question on an individual trade, the answer is always, it could be random. It's anything. That's just the statistical reality of trading. Sorry, guys. It's just it, and you try to reduce that by looking at reoccurring patterns with a probability, and then you capitalize on that, or you try to exploit that, or capture that. But essentially, your the other side of it is a lot more important, just like you said.
Yeah, it's knowing the result of the system and not knowing the result of a
system. So another thing in goal setting that I think is also very good for everyone to ponder or think about, as you go to your development, you don't rise up to your goals. Actually, many times you can have goals that demotivate you because you feel yourself so far away from them. So all you see is just a disconnect between where you want to be and where you are, and that's not particularly helpful. So you don't rise up to your goal necessarily, especially if your psychology is not in the right place, but you fall down to the levels of your systems. If you do something specific every day, you work every day on your analysis, on getting your entry criteria better in place, on understanding your risk rewards better, focusing on that 2 hours a day or whatever, if you just work on the consistency of that part of that system, meaning something that you systematically do again and again in the same way, in the pursuit of gathering data and knowledge, average knowledge from that, that's the level that you fall down. That's the reality. That's your moving average. That's your 100-day moving average, basically, So that's the level that you fall down. You may go up or down from that, but that's the level you come back to. So your systems are actually your linear growth in a way. But, because it swings so worse around it at times, you don't know when it's that and that. And you could exit at the worst possible time. You could exit at the best possible time. But then we're back to chance things. And that's another important thing. Focus on things you can control. In the system, you can't control every little aspect that you must do that is part of the system. If you want to, when people tell me, the market was bad, like, oh, no shit, man. It's always fucking bad, like as if you can't control the market, Yeah. But you got to work on your way of building your structure around reoccurring patterns in a specific way, with a very clear, detailed plan of what you're trying to capture, a defined risk reward, and understanding about the probabilities of that trade, and as you do these things and continue to do them persistently, you can make the math work out as well, but you got to come full circle. Is full circle 50 trades, full circle 100 trades, full circle 1,000 trades? I don't know. It depends a lot on your strategy and on a lot of random factors. So your best chance is back testing it, knowing the data, and then moving forward from that, and optimize as you see diversions from your typical results that you gained over your past testing. So it really, guys, that's business intelligence. Every company does it. It's data science in a way, very simple, actually. It's not completely out there, but that's the way we got to think. That's the way we A journal is your truth, whether you like it or not, whether you want to accept it or not. But that's the fucking black on white proof that you cannot escape, So make sure that you do it in the right way, and because that tells you all you need to know, what you need to change, where you need to focus on, and then be patient and keep on with the task. Your systemize, and that's why also I bring this example basically on every call that I go on. Athletes, pro athletes, man, like a LeBron James or Cristiano Ronaldo, those guys have been admired by millions for a decade. There are hundreds of millions, if not more, rich, and they still are the first guys showing at training, and Cristiano Ronaldo just pushed a new world record the other week. And you would say, like, isn't that guy dead by now? No, fuck, he's still dominating. Why do you think he's doing that? Because he's persistently making everything he understands better and better and better and better and better, and he doesn't give up doing that. And this is how his results happen. He wasn't focused on becoming, rich or famous.
Yeah, absolutely. No, absolutely.
We have a question here from about FTMO. I think FTMO can be two things. It can be great for someone to get access to capital, and also to get on the path of, getting his results in order so that he can pass the challenges. That's the one side of it. The other side of it, how does FTMO make money? Probably mostly like any other broker, from all the other 99% that try it and fail. So it's a very smart marketing way to say, hey guys, you come to me, you win, I give you money to trade. And all the others that come and try, they lose their money. So this is where we're getting the money from to pay the guys that work well. So and you know what? Don't hate them for that. You can't hate a tiger for being a tiger. It's physics. It's its nature. And that's what I mean. So work with that. And that's why I think it's good, but it's not the holy grail. And they are not the saviors of the forex industry. They're actually making money from people losing, just like any broker too, I would say.
No, my only issue with the FTMO is not actually the business concept. It's actually the because we've had students that are doing the FTMO challenge, and they have like restrictions. They have very, very tight restrictions.
Yeah, like only intra week. You can't hold over the weekend and stuff like that, right?
You can trade certain times, and I just feel like with trading, like you just need all available. Like you need the freedom to do whatever you want, and this is where my problem with FTMO comes in. It doesn't come from.
It restricts your abilities, right? But the reason why they do that, if you think it from their perspective, they look at it from a risk management perspective. They're managing their risk this way, and they're making sure that the odds of however their business model works to make money is on their side.
If I were to do it, I would do it the same way. I'm just saying from like a trader's point of view, or from a retail.
So like for a trade strategy like Raj, it wouldn't be a problem. But for like anyone who wants to hold over a weekend, I had this conversation with a student of mine. I told him like, okay, you could consider closing Friday evenings, opening Sunday mornings. Have a look at your average pip result per trade on your statistics. How much will the spread opening closing eat from that, and to make sure if it's a viable option at all. Then you could just bridge the weekend. Obviously you still have the gap risk, but okay, you have it when you stay in the trade as well. You just added one more cost of spreads basically for closing and opening. That would be a way to go around that, but I know what you're saying. Like it moves away a lot of and it adds restrictions that doesn't make it easier to pass it.
And like the market is like especially for people that are like still discovering the journey. We're all discovering, by the way, like as much as we become experts.
Forever, also until we die.
The market teaches us lessons every day, but I just feel like they should be working with like openness and trying to discover stuff as much as possible. And then maybe when you figure out your strategy and your system, you can go get a funded account. But otherwise, I don't think
that's very true. Actually, I had people that have FTMO accounts, large ones, and they say about themselves, I don't have a fucking clue what I'm doing. Help me. I don't want to lose this account. I'm like, am I like Santa Claus? Come on. I mean, we got to work on that. It's a process. But that seems to be possible, So yes, because probably it's so short-term type of trading. If you have a good week or a good 2 weeks or whatever in that period, I think it's a month, right?
It's a month for the first phase. So look at the way they did it. You have to make 10,000, so 10% ROI within the first month. Then with the maximum drawdown if you have a 100,000 account of $10,000. And then the next phase is you have to make $5,000 in 2 months, which which might seem weird to people that don't understand it, but to any trader, the making just 5% over 2 months is just, it's like they're begging you just to over risk, to do it quickly, to finish it.
Very true, actually. Yeah.
It's I know somebody that blew it on the second phase, and I'm like, this was like, you did the difficult part, and then you just
and actually, I've seen people telling me they failed on the finish line. They just did it like, oh, I was on a very good path, and then I just screwed up last week or last few days or something like that. Yeah, that's probably because what you just said, because it's so mentally tough to just, not doing something is an achievement when you understand that, and then it's actually strength, it's not weakness.
Yeah, exactly. So doing 10% in 1 month, people feel, I did this achievement, and now I can, all I have to do is do 5% in 2 months.
Right, easy. Piece of cake.
Easy. Yeah, like super easy. You don't take into consideration the market's going to flip, everything's going to change, you have to adjust, and then they start to get into a little bit of a drawdown, and then they feel like they're going to lose it, and then they blow it.
But they made it very smart, because everybody who starts out trading in some shape or form lands or sees FTMO at some point. So they're really smart. They positioned themselves very, very well. They have their risk in check. They're attracting a lot of, dream chasers. They're probably making good amounts of money with that. So congratulations, I guess, you guys. You're running a good business. It's not completely something I want to do for myself, but totally fine. I mean, we all have to find our positioning in this world. So from that perspective, from a business perspective, I'm congratulating them for sure. From a developing traders perspective, they have some good that they're doing. They're forcing people to at least try, maybe not as much as they could and should, but better than nothing. I mean, other brokers, let's not talk about it.
It's just for the people entering, or the people that have FTMO accounts. It just, like, if you fail or if it didn't work out, just go back to the trades that you have taken, try them out without FTMO. Don't deposit again into an FTMO. Try them out. Make sure they work for a while. Make sure they work within the, because now you're playing a different game. If you're working for an FTMO account, then there are other restrictions. So your system has to change according to those restrictions, so you profit accordingly and you don't lose the account. So make sure those work out, make sure those work. If you start to see consistently, then you'll have no problem making another deposit into FTMO.
Yes.
For the challenge, and hopefully winning it. But to try it out, to just say, I'm going to wing it, I don't think, like, you could do it. I've seen people do it, but then
well, that's what many people try. And I think you can't blame people for trying their luck, but the odds, the likelihood of this to work out is just extremely low, so why not take this money and this time and effort and really invest it in yourself, in your development, in your understanding, in your education, in your training, instead of blowing it to the wind, then damn, go get drunk if you're not a Muslim and have fun with that, but or go have a good steak again, you'd be better off, really,
Absolutely.
Again, if you're not vegetarian, I mean, these days we got to pay attention to what we say. You find something that, it makes you happy, but do that really. And if you want to chase the dream of being funded in trading, get your trading skills in place first. Everything after that bases its results on this. If your backbone isn't there, when there is a little bit of weight on your shoulders, you're going to collapse otherwise. And then ask yourself, is that defeat that you will then have in that moment really worth the negligence in the preparation? Because when you get defeated on that level, it does something with your psychology even more, and you're more likely to even give up completely and never make it there in the space. And you screwed yourself into that situation. So really, not everything that looks good is good for you. In fact, most of it isn't. And if you understand that, if you really want to make it work in trading, or actually in anything in this world, there's something called skills that you need to build. You know, like Bruce Lee said, I don't fear the man who practiced 10,000 kicks, but the man who practiced one kick 10,000 times. You know, that brings us back to the Raj idea, or any specific strategy. So yes, that's how you, and it's in, you know, I guess if we go through ancient texts, we'll find something that says exactly that, literally on every part of this planet. So it's time for us to really accept that and use it and stop fighting physics. You know, if I jump into the pool, I get wet. I can hate it. I can fight it. I can disagree with it. It's not going to change.
What it is, yeah, exactly. You know, absolutely. Yeah, I believe that's it.
Cool.
It was an honor to have you here, and I want to thank you. Like
my honor, man. I really enjoyed it. Thanks.
You pushed something that you stressed about something that I've been talking about a lot, which is a system and the metrics and stuff like that. I think,
yeah, I call it in my mentorship, I call it the prime system. You know, everybody comes up with some names for himself, but yes, I didn't even know we were this much aligned in our thinking, but we are, absolutely.
Yeah. The traders that have most benefited from coming is the people that already had the technical concepts down, but the results were all over the place. They were in just refinement, break even, you know, 1 month in loss, 1 month in profit, second month, you know. And these are the people that I did not really teach them any technical strategy. I just teach them the odds of probability. That's a part a lot of people that want to trade completely miss. They completely miss. And this is where the juice, the meat on the bone is actually, you know, to find. It was mostly about, creating a system, having the rules, the odds of probability.
Yes.
When do you have the advantage? When you don't have the advantage? When to
exactly.
You know, those types
have maintenance over your numbers, you know, over your results. Then you have better expectations, and then you also, that does something with your psychology. You become more confident. You screw yourself lesser as you go. Have, you know, psychological challenges as you trade, because they will continue to be part of your life, but you will be less prone to them every time you go through. Like, look, if there's one thing that we also see that really benefits is self-awareness. And that, I think, is a very good path to self-awareness, is getting into trading if you do it the right way, because you don't get offended by your mistakes anymore. You don't get offended by other people's opinions. You don't get offended by something else happening external, but you're only just focused on what you're impacting, what you have influence over, what you understand, to gain better insight, understanding of what you're doing, the results that directly result from your doing, and you work on bettering those aspects. You know, like, you're analyzing a trade, you see in general the direction that you have is more times right than wrong, but you still hit stop losses. Then it's not about coming up with a new strategy. It's about looking at your take profits and stop loss levels. How do you define them? And actually, if you don't hit them, and you got to change there, and not everything, you know, and then you got to come up with a certain specific idea how to change that you try to, get the idea from your, that's why I say, like, strategy development is like being an inventor. You know, you always have to have these creative problem solving juices also. I love it. It's creative, but it's also very strict, you know, and like these two things, bringing them, and the personal development on top. It's a fantastic, and then the freedom, and, you know, like, if it works out, it's super fantastic. Like, really, I wish it for everyone, seriously, you know, but that's the way to get there. That's the way I know how it got me here. So, and I do think it's possible for everyone to do it. Like, look, if I want to become a rocket scientist, the entry barrier will be a lot higher. You know, if I want to become, I said it last in my group call, everybody was laughing. I said, if my dream was I wanted to become Beyonce, it would be also a bit of a problem. You know, I don't have the physique. I'm not so talented. I'm not here. So, you know, but in trading, literally everyone can have the intellect necessary. It's a lot more about disciplined tasks, about systemization, about persistence, consistence. And those are matters that if you fail doing them, you're likely to fail in every other aspect of your life as well, or at least not become excellent. You know, and that chase for excellence, that enduring of problems, is just nature grinding itself. You know, it's not survival of the fittest, it's survival of the most adaptive. You know, and that's, and how you become adaptive, by grinding with your environment and taking shape and form of it, basically, and also influencing your environment as you know which part you have influence over. You know, like a beaver can build a dam because they know how to do it, and they create their own habitat through that, and they change the whole river's actually actually flora in a way, your biology because of that. So and we are creators in our own respect, but creation is not like, it's not magic.
I like the fact that you stressed adapt. It is
Yes.
It is super important.
Based on data, clarity. It's about clarity and confidence and rule-based, consistent, strategic, systemized fashion. All right, I guess that's a good way to stop this conversation.
Absolutely. No, but Alex, thank you very much. I heard about you through trading memes.
Cool, man. Yeah, actually, it's the guy's fault. Trading memes that I'm doing this mentorship thing. It's we're friends actually, and he got mentored by me as a friend rather, and he took a lot of value from it. And essentially, he pushed me to do this. He said like, "Hey, we gotta do something out of it, and you really helped me getting forward with my shit." And that's how I got here in the first place. Like literally, my environment demanded it of me, and I rose up to the task. And if you think about it, I have much less freedom.
We're happy he pushed you.
Well, thank you. I'm happy to be here. Like what I was going to say is that I have a lot more work, much less freedom. It's not about the money really, but what's getting out of it, really, contributing to help people get their minds right and change their results and make them believe in their abilities in the right way, not just it's going to fall in my lap if I do the law of attraction happiness talk. That's too simple to be true, otherwise we'd just be trading MA crosses. It would also work. Life isn't that naive. Always think about it. When you're naive, you're going to be eaten by someone who's more sophisticated. So there's a level of complexity that you need to rise up to. And that complexity often is in qualities, meaning patience, systemization, and these kind of things. And I'm a firm believer in that, and getting this message out and really helping people understand that for themselves and go out, when you're going out and try to, find your luck and chase it, try to do it in the right way, like don't go with a sword to a gunfight, that's
know your odds, know your probability, know what
exactly.
Know how others benefit from your losses and how others lose from your wins, and etc.
All right. Thank you very much, guys. Thank you for having me. I really enjoyed this, and I'll be looking forward. Send me the video, please, afterwards. I'd also love to share that with my group and team then afterwards, if it's possible.
100%, I will. It's all recorded, and we will also upload
Very
it.
Cool.
And Alex, we stay in touch.
Yeah, absolutely. Thank you very much. So have a great weekend, everybody.
You too. Bye-bye.
Bye-bye.